Agentic lending is, I would say, one of the riskiest or more complex agentic AI use cases in finance. While everybody's talking about agentic commerce, agentic payments, stable coins, new protocols for all that, I must say that the agentic lending topic is the next one. And I'm very interested in this because it really touches the lives of real people who want to buy a home, buy a car, grow a business, plan for the future. And here in the EU, I must say we have a very clear regulation through the EU AI Act that classifies that when AI is used to evaluate the creditworthiness of a person, then it's high risk. In the US, I think there's more nuance and more questions around fairness, open discussions. So to go deep on this very important topic for our society and for financial services, I'm joined by Tamara Laine, who's the founder and CEO of Empower, and she is building agentic AI infrastructure for lenders. Welcome, Tamara.
Thank you, and what a wonderful introduction. I couldn't agree more that AI is the next frontier of lending, and it is also the early stages of it. So it is a place where there are still so many questions.
So many questions. Let's set the scene around innovation in lending. When I think of it, we've had maybe 2 decades of fintechs that have been, let's say, attacking this problem. We've seen alternative credit scoring. We've seen cash flow underwriting. We've seen the use of machine learning to help offer better credit, more credit, better risk management, serve the underbanked. Tamara, in your opinion, what did these innovators fix or improve or attain? And what is left really that we hope that agentic and the developments in AI can add?
So you're going to hear a real mixed reaction from me on this as I was thinking about the question. So let's set the stage, right? If we talk about lending and the how lending started, you have in the 1950s, really the foundation was set for how our modern system was built. So the pipes of how our modern system was built. And if you think about in the 1950s, lending was still to men only, right? Banking was really a male task. And it only started to become more inclusive when we talk about the 70s. And that's not that long ago. Late 70s are when women were really allowed to get bank accounts and credit cards. I was just watching something that was put out by PBS, and it was interviewing Hillary Clinton and Gloria Steinem, who Hillary Clinton, who went on to be the Secretary of State, had to get permission and get signatures from her husband when she was an attorney making more money to have certain financial services. And so that's mind-blowing that we're still, let's just say we're still in the time frame where that is something that people experienced. So now you fast forward and the internet was created. And now you're talking about the last 2 decades of really growth. So we've had such incredible technical advances since then. And we can't discount the fact that we went from incredibly manual processes to now technology has come in and created really great ways to make lending faster and to try and find tools that create better answers for underwriters. And so by that, now you have new scores that are being produced with machine learning, and they're bringing in a lot of data and they're giving more indicators to underwriters. And so in the last 2 decades, underwriting has become faster, but it's still become more of a black box, right? You have all
Yeah.
these mysterious systems and scores coming at underwriters with hundreds, if not thousands, of data points coming in. You don't know where they're coming from. The way that the machine learning is being used, you're like, it's great because you feel like there is some underbanked being pulled into the system and you feel like there's progress, but it seems to be these shadow systems popping up everywhere where it's still not transparent. The borrower still doesn't quite understand the scoring system, and it's become incredibly complex, right?
So the risk
So,
models that have been developed because we added more factors or richer data sets, they're still not explainable, and we're not sure if there's biases. We can say that we've broadened the serviceable
and then the question
addressable.
really goes to, have we solved the problem? And when I started working on Empower, the stat that really struck me and was like one of the foundational statistics that I couldn't move away from and why I started to work on this was the gig economy, right? We're talking the gig economy, the new economy, it's about half the US workforce, and 6 out of 10 say that they've been denied a loan. So if that's 60% of half the US,
Yes.
work population, that's a staggering number that is still left out. So we
Yeah.
can't say that we've solved the problem with machine learning and with the new
Alternative data that goes
alternative.
beyond the payroll.
Exactly, because our system is still stuck in some of our old structures that we've come up with new tools to create better insight, but yet we haven't moved away from the old structure and thought process of how our economy and how a borrower looks in order to really make a structural change in the financial thriving of our economy, right? Of our workforce, of our borrowers. So as where I'm trying to not be like gloomy, I'm saying, yes, technology has really done a good job and there's been a lot of advances. It hasn't actually solved the problem of getting more loans into good borrowers' hands.
Okay. So you still see a gap, and that is what you're trying to exploit if you want and design better systems to serve more people. And tell us a little bit about Empower. Are you building a dual ecosystem, one that is serving retail, individual consumers that need credit, and another that is really a B2B offering for banks and credit unions to better serve their customers?
So we are purely B2B. So my goal is to help institutions reach more customers. And one of the things that we created when I started, I very much and I still talk about the new economy. It is a passion of mine to get more borrowers into the financial system, to get them better access, better rates. But what we know is that banks also want to serve their prime customers. And so how do we blend that together without giving banks a new scoring system, right? Without being like adding another shadow system into this ecosystem for them to try and make decisions when they're already having a hard enough time parsing through the kind of systems that are there that are stacked on top of each other. So at Empower, we designed the first agentic ecosystem for lenders to create better lending experience for their borrowers, whether they're prime or subprime or new acquisition or gig workers or creators. Our agents can parse through the data, do the manual work. They're all policy bound and compliance first. So as an AI native company, we're able to come in, be more agile, and policy bound means that we are always up to speed with the compliance and regulations that are in the region.
Does your intelligence, where do your agents sit with respect to the loan origination systems that every bank will have, be it through Encino, through
Yep.
Encompass, whatever, a provider, their own system? Are you proposing a replacement, an integration? I don't know, it's an additional layer. Give us a sense
We can,
and
yeah.
why.
Yeah, we can sit on top of or be an LOS system. And we understand that a lot of organizations like their tech stack or they are in a relationship with their providers that they are in for a while. And so organizations that want to incorporate AI, especially policy-bound AI, not just a chatbot, we knew that we would have to go in and be able to integrate into their system, right? And so that's how we built because we didn't want someone to have to wait 2 years if they were in a contract with an LOS that they liked to be able to use our system. We wanted to make sure that if a provider wanted to use responsible AI, that we could assist them with that.
Yeah. Can you give us sort of a high level idea of the architectural design without getting technical of what we are talking about here? Is it very technical? Are there different layers? Or maybe what kind of agents have you designed? I assume there's multiple agents, how they connect, and those types of questions.
Absolutely. We spent a lot of time on our underlying proprietary technology that is the policy agentic structure, which means that we can pull in a lot of information and we can hook into a lot of systems and build policy bound agents on top of that that are incredibly agile. We've started with the first six agents, which are our acquisition, retention, portfolio, risk mitigation, so pre-collections risk mitigation agent and financial fluency agent. And so with those agents, they are action oriented. So our acquisition agent actually does the work of collecting all of the information and data from the borrower and the third parties that need to bring in the information to compile it. Oh, we got an underwrite to compile it and synthesize it for the underwriting agent. The underwriting agent then provides all the information that the human underwriter needs in order to make a fast decision. So those two agents, they basically compress onboarding time and increase the human underwriter's ability to make a good decision. And that agent's there to assist with that. And then we've got our other agents that operate off that. Like I said, our risk mitigation agent, which is an agent that can help pre-default, right? Before something goes to collections, there's moments where you can intervene, the organization can intervene and say, hey, we noticed you just missed a payment. How can we help you?
Yeah, and the organization doesn't have to wait for month end or whenever you get the report of what's been missed and matching all those. Yeah.
Yeah. And sometimes there's so many reasons that people miss a payment. Sometimes someone's traveling, right? Sometimes someone just forgot to set up automatic payment, or someone thought they set up automatic payment. And 3 months later, they're like, wait, this
Yeah.
hasn't been. I can say from experience, that's happened to me.
Yes.
I
Yes.
was like, oh, shoot, life just gets away from you sometimes. So there's a lot of reasons for missed payments that have nothing to do with not having enough money, right? Or so being able to have an agent who can intervene in these situations drastically help the bank's outcomes
Yeah.
or the lender's outcomes.
Yeah. And in terms of the what I would call the three elephants in the room, which is the governance, the auditability, and the explainability of what these agents are doing and why. I assume this is you. Do you have an agent that is focused on that? How have you thought of all this at every step?
Yeah, so that's a really great question and a very complex one. So I will say, using AI for the actual decisioning in any lending is problematic. And so we don't use AI in the decisioning moment of any underwriting. We use a decisioning matrix that pulls that in for the underwriter, and the human makes a decision based on really good data put in front of them. And I'll back up a little bit. I have an Emmy behind me. I was an investigative journalist and a financial news anchor in the beginning of my career. And one of the stories that I did that actually won the Emmy was on ethical AI and stock and activist investors who wanted a code of ethics in AI development, specifically for Northrop Grumman and Amazon. And I was talking to a whole bunch of experts at the time, PhDs, people working on the development of this. And what was drastically clear was that AI, anything that you create, any software that you create has bias in it. And how AI is trained has bias in it. We know the underlying are the models that are out there right now that are the big models were trained in places like Reddit and Twitter and different places. And now we've brought in better information. The agents are better trained, but there's still an underlying way that our technology is developed and trained where you can't 100% say that these
There is no bias. You can't.
that
There's a
yeah.
narrative in each, whatever language, in each area, whether you're scraping a digital media or whatever you're scraping, there's a narrative that's hidden there
Yeah.
that is going to be.
And
Uh,
so there's use for AI in decisioning, but it is not to make the decision. Because in my opinion, right now, and from all the work that we've done, is that still something that you can't 100% guarantee? And so therefore you should not use it. And so that's why we've created our system differently, where the decisioning and the actual final decision is human led. And I'm a firm believer in designing intelligent AI in an ethical way to maximize human excellence. And so what we do is we design our product so that the human in this loop can thrive. And that's the underwriter and the loan agents.
So that's why I realize that you keep repeating AI prepares and human decides. That's a mantra
Yep.
that you're using, and it's part of the vision of what you're building. Does that mean, is it a soft version of what the other day Brian Armstrong of Coinbase, they laid off 14% of their
Oh, yeah.
workforce?
Yeah.
And AI is one of them, is the a narrative excuse. And
There's some other
it,
factors that were going
yeah,
into
yeah, yeah.
that I've been reading that aren't necessarily all AI based.
Exactly. But what's interesting is he described the vision of using AI to end up with one person teams. So, for example, you have a product, whatever the product is. In Coinbase's case, it's the consumer facing app, because they have different products, obviously. So his vision is to use AI to get one person team for each product. So a very, what I would call a very lean organization versus an organization that does leverage AI, but does so to serve more and in different ways, new services and so on. Where do you stand? What do you see for lending? Because
Yeah.
obviously you're focused on lending.
So I've got two thoughts on this. First, many of the lenders that we speak to right now are short on human capital. And so one of the reasons that they want to employ our technology is not to replace anybody. It is that they do not have enough people for the business that they have right
They
now.
don't have the capacity, the human capacity.
Yes. And so that's one of the things that we see in front of us all the time. Second, I go really back and forth on this. I do believe that jobs are going to be
Impacted.
changing,
Yeah.
impacted, but I don't believe in the lump of labor theory, right? Which the lump of labor is that there's only so much work to be done, and that if AI is doing that work, then the human doesn't get to do work. I
Mm.
believe that in thriving capitalistic societies that work builds with capacity. So as you interject AI into the system, it's going to just create a different type of job to service that AI. And so you're going to have work that builds. And if you ask anyone right now who's working on AI, our workload has tripled
Sure.
or quadrupled, right? And so there's a changing workforce. But right now, I don't see work going down. It's just there's going to be a really harsh, weird transition
Transition. Yes.
into
Understood. Yeah.
the new. And that's what I believe right now. And things change so fast. You can talk to me in 3 months and see where I stand.
Yeah, I've always thought, and I'm not a deep expert in lending. I didn't, my banking background is more investment banking rather than consumer banking. I've always thought of this idea that if money can be streamed, then credit, we should get to the point where you could stream credit, whether it is microcredit or major credit. There's very simple examples. I'll give you a personal example. Obviously, like many of us, I have many credit cards. Some are personal, some are for my small business, right?
Yeah.
What happens is my needs for credit through credit cards are not uniform across time. Most of the time, I'm fine. I'm largely utilizing the credit limits that I have. But then there might be a month where I need triple the credit that I have. And I don't want to be trying to add a little bit here, split it there, split it over there, let alone I don't want to mix my personal with my business. So
Mhm.
there isn't an easy way to do that for that one-time need, right?
Yeah, you're right.
And this is a very simple thing that I'm sure a lot of people face, but there's all sorts of other cases where you need to have credit, what I would call all these edge cases. So there's so many problems, if you want, that we could solve beyond the also people that don't have access at all, or what makes sense, how to optimize. Does it make sense to borrow? Does it not? All those questions. Who's going to build the agent for me and you to give us advice, right?
Exactly. That's a really interesting thing. And especially one of the conversations that I get in a lot is the personal shopping agents,
Yeah.
because that kind of ties in with your
Yeah.
personal shopping agent, like anticipating your needs and acting on your behalf online or financially, right? And so that goes that you're going to have agents that are certified personal wealth managers that are taking the tests and updating themselves. And I know someone who's working on a bank for agents to
Okay.
transact money
Yes.
because our banking system is not set up for agent transactions.
Yes.
Like,
Yes.
how wild is that? Thinking about that makes me go, whoa, where are we going? But
100%, because if you think of it, banks are I don't know how they're, by the way, going to get licensed, how they're going to discuss with the regulators to get the license, but it's definitely a need. And right now, what's happening is there's other entities that are trying to position themselves as those that verify and authenticate agents, give them an identity, give them a reputation. Visa and MasterCard are in that business.
yeah.
So it's a world that is changing really fast. Tamara, I want to touch a bit on the US regulation around lending. I'm not very familiar with the outstanding questions that are out there around algorithmic, if you want, credit decisioning, all these issues of fairness, AI. You want to share with us a little bit where the landscape is and how that affects what you're building, if it does?
Yeah, so right now in the US, unlike the EU, which you're very lucky, there's one kind of overarching AI regulation in the EU, which is very nice. In the US, you have a lot of popcorning regulations coming up. And my personal opinion is either there needs to be no regulation or there needs to be one regulation. But insecure regulations that are popping up in different jurisdictions are really unstable for innovation, right? And just say when that happens, investment goes down in those areas because investors are waiting to see what will happen with regulations, right? And so then you've got a lot of good innovators with technology that it's being stifled. So I am a huge fan for clear regulations. And I'm lucky being in a field of fintech. We're already a highly regulated space. So we have a lot of guardrails to work off of, which actually make my life easier because you've got those clear things that you can say, yes, we are absolutely compliant with this. We are absolutely compliant with this, right? So one of the ones you're talking about, I believe, is SR 11.7, which is one of our leading regulations. And so just to give some plain language around this for anyone who is wondering, it says that if you use models to make important decisions, you must know what they are, how they work, how they can go wrong, and how you are monitoring and challenging them over time.
Okay.
So it expects strong governance, ownership, approval, independent validation, all of these things, which are incredibly important when it comes to decisioning. So that's what you were talking about, correct?
Yes, yes.
Yeah.
And now that you mentioned that, my question is your agents that can be plugged in to an LOS or create the LOS stack from scratch, are they model agnostic? Can each bank say, hey, I want to use this large LLM behind this, or how are they set up?
Technically, we can, but we try and make that decision because we have strong opinion. I won't say my strong opinion on it at the moment, but
Yeah.
we have strong opinions on this. And we are building out our own SLM
Okay.
just because we believe that will be a better solution in the long run. But as a startup right now, we are leveraging one LLM that we've picked.
Okay. But eventually you do want to train an SLM that is specific for this.
Yes.
Uh, Interesting. And have you done pilots with banks? Uh,
We're in
and
a pilot right now.
okay, okay. So I assume you don't have yet some learnings to share with us from this pilot phase.
Check back with me in 3 months. I would happily come on and tell you my learnings.
Okay, okay.
Which
So,
I know will be a lot because I really believe in strong feedback, and that's the importance of building longevity in products is
yeah,
that really strong feedback and analysis in the beginning phase.
yeah, yeah. Yeah. What are you expecting from this? What are the KPIs or the metrics that you're looking for to say, okay, this is working how it should work, how we want it to work? What are they?
So our main KPIs are acquisition rate. So are we improving acquisition rate by 10 to 25%? That's like the lowest bar that we are going after for our pilot.
Okay,
Risk. Are we decreasing risk by 15 to 35%?
okay.
And then orchestration. Orchestration is huge. It's the time. So are we improving the
Over
yeah, the overall timing of the loan, right? So are we getting
of
loans to be
processing from the minute there is a touch point with the customer until
money in their bank?
all these agents deliver what is needed to the human that makes the decision.
Yes. So are we just really right now, some of the banks that we're talking with, their rate to getting a loan to a customer is probably triple or quadruple what we believe we can do. And mortgages in the US are a prime example. A mortgage should technically take about 8 days, but on average, it takes 30 to 45 days.
Despite the digitalization that has happened.
Yes. So that's one of the main indicators that we're looking at. Those are our three big ones.
Interesting. I like to be clear on what are the KPIs and not just because we can get obsessed about the cool technology and
Yeah.
the agents, and I have an extra agent for this too. We can really get excited in this phase about all this and really forget what is the business outcome that we really want to achieve. And I imagine eventually there'll be enough data to see whether the pie has been enlarged by having more deployments in the market overall and hopefully better risk management. Before we close, Tamara, do you have a vision, an idea of what may happen in the next, let's say, 5 years in terms of agentic lending? Will it be, I don't know, will vendors, LOS providers all become agentic? Will core banking providers also become agentic? Is this something where you think it will become a standard and mainstream and maybe even commoditized or not?
Oh, I definitely believe agents will be incorporated into all systems of lending. I think that you're going to see right now, I was looking at the rates of adoption of AI just in general. And we've had AI for several years, longer, but just like in the ethos of every day, several years, right? And it's only 53% adopted in the US by consumers. So if you think about that, only 53% of people use AI and most generally as a chatbot,
That's
right?
that thought,
And
yes.
it's only 12 to 18% of businesses. So with that as the indicator of how things are growing, I believe in the next 3 to 5 years, we're going to see maybe 60% saturation in businesses, right? And with consumers, you're going to see more use of agents, but we still have a long way to go. So as fast as we think being embedded in AI, oh my gosh, it's moving so fast every day.
Yeah,
It
yeah.
still is not the way that most people operate.
And
And
when we look at the big AI players like OpenAI and Anthropic, they do have a distribution problem, especially at the enterprise level. It's not happening as fast as they would like, as fast as the technology. We have more powerful models every 2 or 3 months, but the penetration in the businesses is not there. It's not happening at the same pace. And I was reading a report by Cinch today saying that over 80% of AI agents that were in production, this is not in financial services industry wide, have been pulled back because the business realizes that they're not really ready. And
yeah,
there's many things that need to come together to extract that value. Because also the reality is that you need to
there's a
stop.
fox. No, there was a fox outside my window.
Oh,
Pardon
really?
me.
I
Sorry.
was
Yeah.
like, really?
Yeah. Cut it out. Am I able to just look really
Yeah, 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 turn
quick?
it.
Yeah, it was just so wild. A cute red fox just
Oh,
went
wow.
right up to my
I
window.
was,
That has to be good for us because yeah. And so sorry I
yeah.
got because I was like, oh my gosh, it's right at my window.
So I assume you haven't seen one before, otherwise you wouldn't be so surprised.
Yeah, not next to the house. So yeah, so sorry. Go on.
But let's go back to where we left the conversation.
Adoption.
So enterprise adoption is lagging. That is clear. And I think again that lending is a very sensitive, with a lot of social impact area of the business, core, of course, area of banking. And we have to get it right there. There is no room
Yeah.
for,
And every bank that I talk to knows that they need to implement agents and knows that they need to implement AI. They just don't know how.
yes,
And so that's the clear trend. And so it's not whether or not they're going to adopt it, it's just when and how.
when and how. Yes. And how to start.
Yeah,
And
exactly.
your approach of AI prepares, human decides also gets rid of the issue of the how regulators will handle this. Of course, there's always the question, even for the preparedness, if an AI agent goes rogue, you're hoping that the human will catch that.
100%. That's why that's the human intervention is so important. And our agents are policy bound, so there's not going rogue. They can't go rogue, right? That's the difference between, I keep getting asked the difference, like, why wouldn't a bank just use Claude and build their own agents? And it's because that's wildly insecure and you have to monitor it and you have to have a team to monitor it and you have to, building your own process is hard. It's
It's
laborious.
very hard because there's so much contextual information that needs to be checked every time that it really doesn't make
And
sense.
then you're responsible for the security. You're responsible for the upkeep. You're responsible for all of the checks and balances, right? And so for, I would say 90% of the financial institutions, they don't have huge IT teams. And so the argument that software is dead, I think is incredibly wrong. Enterprise organizations need other people to manage the heavy lifting of creating technology and software. They can't do it all in-house.
They
It,
can't do it. Yes, there's very few. And actually, the other day I was listening on some discussion that Mark Anderson had and was saying something very similar or related to this, that there will be jobs. We need a lot of people to help medium, and small businesses to integrate AI. It's there, but people don't have the time or the capacity or the how to integrate. I'm seeing a lot of people that are taking on that role. Let me go and help this
Yeah.
type of business, be it size, be it in certain industries, to integrate the tools, not building the tools. And
Yeah.
how do you decide what you need and what you don't need, right? And then cost optimization. There's so much that needs to be decided, and it's not evident. Just saying, okay, the capability is there, is not so easy. And we can see it in our personal life, in how we adopt the tools. I see it in my business too, as a solopreneur, the way that I progress and decide what tools to use is not linear. It's not easy, right?
No,
Yeah.
I feel you on that as well.
Yeah. And you can imagine in a company, in a business, how that is also reflected. So in closing, empower. Who are you trying to empower?
Oh, it's a double-sided question. I am empowering lending institutions to serve the underbanked and to serve their customers in the best way so that their customers can thrive. So we serve the banks, and in my heart, we're serving the new economy that's coming up that should be given great financial access.
And when you say the new economy, are you more thinking about gig workers? Are you thinking about lean companies? What is your
Yeah,
vision?
I see the new economy as gig workers, creators, Gen Z, thin-filed borrowers, nomadic workers. There's a new economy that, again, it's about half the US economy. And in Europe, the numbers are similar. In Africa, the numbers are even more booming, that work and live and bank differently.
Mhm.
And we want to bring them into the financial system.
Tamara, thank you so much. This is a really purposeful mission and worth putting your energy and building this.
Thank you. Great conversation.